Hey guys, happy Wednesday, June 18th. In this video, a very quick recap of GameStop's two bond offerings, comparing the March bond offering to the recently completed one in June 2025. What is similar on these? What is different? What is GameStop's strategy here? What are the bond buyers' strategy? I hear so many crazy, ridiculous theories out there on social media. So let's recap that again real quick. Look at the comparison table. And if you guys want to have a live discussion with some actual bond traders so we can do some Q&A, any particular questions that you might have, make sure and leave them down in the comments of this video and let me know, and we can get that set up for you in the next couple days. Because the number one thing I think that GME retail stock traders are going to get wrong over the next several years is misunderstanding the motivations of the bondholders. And that is because there's just, a lot of social media people putting their own spin on it. And in my opinion, not correct spin. It's pumper spin. I want you to understand the real reason that the bondholders are buying these bonds and what their motivations are. That way we can have a good foundation for our own trading strategy on the stock. Without any further ado, let's get right into the video. This is the bond comparison table that I posted in my Discord earlier today for the Discord folks. And now that I have a couple minutes to get a video out, I wanted to share it with you guys. In the green column, we have the March announcement, the April 1st, 2025 bonds due 2030. We've already talked about that many times over the last several months, but we have this new blue column, 2.25 billion face amount of bonds that were issued on June 17th, 2025, netting the company GameStop $2.21 billion. Beautiful. You can see the dilution amount is greater on this newer bond issuance because the amount of bonds sold is larger. When we combine them, we have somewhere over 128 million potential new shares to be added to the float. I expect that they will be at some time. 0% coupon rate on these, and we're going to circle back because this is the biggest thing that I hear people misconstrue on social media, that the institutions and the hedge funds were tripping over themselves to give Ryan Cohen free money because they believe in him so much. I think they believe in making profits every day. I don't know about you guys, but we'll talk about that at the end of this video. The next thing that is different on these two bond packages is the maturity date. Whereas the first bond package is due in 5 years, this newer bond package doesn't mature until 2032, so 7 years on that one. Both of them have a soft call where on the date here listed in the middle of the table, that soft call date is a date in which GameStop could call the bonds back. The put date is the next date, and that is a date at which the bondholders could put the bonds back to GameStop, where they just say, I don't want to play this game anymore. Take the bonds back, please, and thank you very much. The conversion price, a little bit different, a little bit lower here on the new bond package, $28.91. There is a conversion threshold that must be met. Above that, 130% for both bond packages, putting the conversion threshold price for this new bond package at $37.58. If, as it says in the conditions, for 20 out of 30 trading days in a fiscal quarter after November 1st, 2025, it is over that conversion threshold price. Now, do I expect that any of the bondholders will be converting early, even if the price runs way, over $37.58, over $28.91, even the conversion price? I do not. I don't expect the bondholders to be converting early, because as long as they're holding the convertible bonds, they have the optionality, the call function built into those bonds that is always going to have greater value than immediate conversion. That call option functionality in a convertible bond will give them greater value all the way up until maturity. And so the normal expectation when we're looking at convertible bonds is do not expect early conversion until very close to the maturity date. And again, I'll drop the example of Cinemark, which has 5-year bonds. I think there were 5-year bonds due in August of 2025 that are trading right now 2x the conversion price, and yet still nobody has converted their bonds because that is not the norm, and you should not expect that being the norm here with GameStop would be my general thought. There's nothing special or different about these bonds or about GameStop or the way that institutions or hedge funds that are buying them look at it. This is Finance 101 math. This is stuff you learn your freshman year in college about convertible bonds and whether or not it makes sense to early convert. And I don't expect we're dealing with irrational institutions buying these bonds. So we should follow rational thought about you just don't convert early. The exception to that might be if GameStop were to call the bonds early due to some reason, some strategy, some financial strategy that the company had after the soft call date. GameStop might decide to call the bonds back early. That is always a potential. Let's close out by talking about this issue of why did these bondholders give billions of dollars to GameStop while they're earning 0% for the next 5 to 7 years? Is it because they just believe in GameStop and Ryan Cohen? Look, there might be some of them that are directionally long betting on Bitcoin or GameStop's future success. Of course, there could be some, but the fact of the matter is that the vast majority of these bond holders are running delta neutral hedging Arb strategies on these bonds. They could even be loaning out their bonds to people that want to short the bonds. There's different ways they can create revenue through loaning out the bonds, just a small example, or running these Arb strategies, making money every single day, every single week. And all they need to do is get better than the risk-free rate of return. You know, the normal alternative, they might be keeping this money is in a treasury earning 4%. All they got to do is earn more than 4% on a year with these bonds. And with a highly volatile stock like GameStop, that is easily done, at least, you know, in the scenario that we're in right now, in the timeline that we're in right now. It might change over the future, and maybe the bond holders' strategies might change, but right now, rest assured, they are making plenty of money running their Arb strategies and their own proprietary trading strategy on the stock, on swaps, on options, on the bonds. And this is very complex. I don't pretend to understand it all, but I can guarantee you all the people who are trying to oversimplify it on social media saying, these guys have no problem giving Ryan Cohen money for 0% and they don't even care. They do care, and they are making money every single day. And if you think that they're just handing over money because they believe in Ryan Cohen and they're fine getting 0% because they know GameStop's going to run up, you have missed the entire ball game. I'll put a link again in the video description to the white paper on the basics of convertible bond trading. And I invite you to read that if you're a finance nerd like me and you like learning more. And if you have any specific questions, let me know. And like I said, there are bond traders that I talk to because I don't pretend to be a bond expert. I'm trying to learn more and more every day. And I've been putting a lot of work into this little niche to grow my own knowledge and experience for the last year. But there are people that I lean on that do this every day for a job. And I'm happy to have them on with you guys on a live and answer your questions. I think that is a much better resource than getting all this gobbledygook pumper talk from all of the GME accounts out there. I get the excitement. I'm long GameStop again now too. After this most recent dilution, I went back in and bought some GameStop, whatever I bought it at, very close to $21. So I hope it goes up. I think it will go up. I'm comfortable with the risk right now. It's still a speculative trade until GameStop gets some better earnings on the books. But I think that my Q2 forecast for GameStop is probably going to be my most positive one ever. And I'll be sharing that early with the folks in the Discord. Haven't decided yet if I'll share it with anybody on YouTube. But if you're in the Discord, rest assured, those numbers will be coming soon. Thank you for watching, guys. If you have any questions, leave them for me down below. And I will see you on the next video.